Hey traders, it's John Fortune here, this week's Weekly Forex Forecast for the 20th of January to the 24th of January 2020. As always, we're going to start off by looking at the US dollar index and crude oil before running through a number of markets, looking at the key levels of support and resistance in the process. I'm also going to be highlighting some of the targets that we're going to be looking for in this coming week and also for the weeks ahead. So as usual, I hope you're all having a great weekend. Let's jump over to the charts and see where the money is this week. So as always, we're going to start off by looking at the US dollar index. Now, the interesting thing about the dollar index is last week we didn't really have a huge amount of movement. We were looking further declines from roughly this area, this key area of resistance we highlighted in the previous video. We did sell off from this area, and at the end of the week we bounced and we actually reverted back up above this level. And we should now, in the very near term, we should be looking at least for a minor pullback and a further appreciation to the upside. Now, the overall problem we have when we're looking at the dollar index, and of course for those of you who follow these videos and for members, you will know we're looking at the dollar index as a precursor to the dollar pairs, because we want to work out if the US dollar index is strong, if it's bullish, and if it is bullish, if it's in an uptrend, on multiple time frames and it's strong and we have a bullish bias, we're looking generally to be long the dollar, short most of, if not all of the other currencies. If we're in a strong downtrend, we'll take a bearish bias and we'll want to be short the dollar and long most of the other currencies. But if, very similar to we have now, we have a lack of volatility, we are overall in a downtrend, but we are correcting to the upside near term. Although we're looking for a very short-term move to the upside, we have to actually go into next week with a neutral bias on the dollar, because we could very easily see a slight pullback, a test maybe of the 97.82, and then a bigger sell-off to the downside. Okay, and this move up followed by a move down will actually equate overall, very similar to last week, to a kind of neutral week in the dollar. So we go into this week, although we're looking for a very short pullback and a move up towards the 97.82, we are going into next week with a neutral bias on the dollar index, and it means we're not going to have a strong opinion on this one way or the other. We're going to trade the individual charts and the currency pairs on their own merits, so the way that they are actually structured right now, without a strong bias in the dollar one way or the other. So the next market that we're going to look at is crude oil. Now, we had this big sell-off to the downside in crude oil once the US-Iran tensions dissipated. And when you have a big sell-off like this, you have to expect these markets to actually go into a bit of a range, a bit of a correction for at least a short period of time. And this week we would be looking overall for further declines to the downside. But first of all, we'd expect to see a correction. And we're going to be seeing if we can come back. And as always, if we can come back and retest broken support, turning resistance at 62.080. If we can come back, and especially if we can come back and test broken support, turning resistance, this is going to be a great place to start to look for bearish setups in crude oil. And if we get the right kind of bearish setups, we're going to be looking at initiating shorts down towards the next key area of support to the downside, the target set, and the 56.76. So the next market we're going to look at is euro dollar. Now, last week we highlighted the 1.10940 area as an area to start to look for a bounce to the upside in this market. We did get a bounce to the upside in this market, but we had no follow through because of the DXY last week, just lacking volatility, barely moving until the final days of the week. We did come back down and we've retested the 1.10940. So this, once again, going into next week, becomes a great place to start to look for those bullish setups. And I say bullish setups, guys, this is very important. I get questions sometimes. We are looking for tradable setups in these areas. We are using risk management techniques. We are not just entering on these levels and without stop losses waiting for these targets to be achieved. We're looking for tradable patterns in these areas. So if we get the right kind of bullish setups in these areas going into next week, we're going to be looking at initiating longs up towards the next key area of resistance to the upside and the target set at 1.1249. Just bear in mind as well, something else, guys, which I didn't mention when we were looking at DXY, is it is January, first year of the month. This is very often a corrective month. The markets are getting themselves into place for moves for the remainder of the year. So if you are trading these pairs, you don't have to go all in. It's not about trading all of these markets. It's about trading the ones which set up the best and taking the best setups as they appear. So the next market we're going to look at is pound dollar. Now, we start the week sitting underneath a key area of broken support from the past, already turning resistance to the 1.3077. Going into next week, if we can get a pullback, and preferably any pullback in this area, especially if we can come back and retest broken support, turning resistance once again, this is going to be a great place to start to look for those bearish setups. And if we get the right kind of bearish setups in this area, we're going to be looking at initiating shorts down towards the next key area of support to the downside of the target set the 1.2906. So next market that we're going to look at is US dollar Japanese yen. Now we start the week above a key area of broken resistance from the past, looking to turn support at the 109.280. If we can get a pullback, and as always, if we can come back and test broken resistance, turning support, this is going to be a great place next week to start to look for those bullish setups. And if we get the right kind of bullish setups in this market, we're going to be looking at initiating longs up towards the next key area of resistance to the upside of the target set at the 111.03. So next market that we're going to look at is Aussie dollar. Now last week we highlighted the 0.68640 as an area to start to look for a bounce to the upside. We did get a bounce from this area and we started to correct, very similar like we did in euro dollar because of the lack of volatility in the dollar index. For those of you who like your wave counts, we are possibly in a 1, 2, 3, 4, 5 with an A, B, C. So going into this week, if we can come back, we've already had a pullback, but if we can test once again the 0.68640, this will be a great place to start to look for bullish setups in Aussie dollar. And we're going to be looking at initiating longs if we get those setups in this market up towards the next key of resistance to the upside and the target set at the 0.6992. And if we can get a breakthrough here, we're going to be looking up towards the next key of resistance to the upside and target 2 at 0.7084. Just bear in mind, if we do get a breakthrough here, it's probably going to take a couple of weeks to get up to the second target here because of the distance to that target. So next market that we're going to look at is New Zealand dollar. Now last week we highlighted the 0.66150 as an area to start to look for a bounce to the upside. We did bounce from this area and we started to actually test a little bit deeper. So we've also added in the 0.6590. You can look at this as a bullish area as opposed to a specific level as it's testing both of these levels. Going into next week, we are looking for further advances to the upside in this market. What we would like to see though before we start to initiate long positions in New Zealand dollar is if we can start to get some bullish formations and patterns in this area, and we're already starting to see a bit of a reversal pattern here known as an inverse head and shoulders. But if we can get full confirmation of bullish setups in this area, we're going to be looking at initiating longs in this market up towards the next key of resistance to the upside and the target set, the 0.6773. And if you want to take a conservative target, you can actually take the top over here. But overall, we would be expecting, if we can get this rally in this market, to come up to the 0.6773. So next market that we're going to look at is US dollar Swiss franc. Now last week we started the week in this area and we were looking for a sell-off down towards the target set last week at 0.9635, which is about here. And you can see that was the move from last week. We actually bounced from the target we set at the 0.96350, and we start the week actually pulling back towards a key area of broken support, potentially looking to turn resistance at the 0.97280. So any pullback in this area that we're already getting, we're going to be viewing this as an opportunity to once again start to look for bearish setups in this market. And we're going to be looking at initiating shorts, and preferably if we can come back and retest 0.97280, as this will give us the best risk to reward on our setups. We're going to be looking at initiating shorts if we can get those bearish setups down towards the next key of support to the downside and target 2 from last week at the 0.9584. So the next market we're going to look at is US dollar CAD. Now last week we highlighted the 1.30650 as an area to start to look for a decline to the downside, to start to look for bearish setups in this market. We really did nothing last week in this market. We just moved sideways. We just corrected. There was no real move up or no real move down. Now this is a little bit of a warning because last week we had that late week surge in the dollar index. And if the dollar index is surging to the upside, or maybe surging is a bit of an overstatement, but if we have that advance to the upside in the dollar index, and yet the US dollar CAD has failed really to push to the upside in any significant way, if we start to get the dollar index moving sideways, or if we start to get the dollar index turning to the downside back in line with the overall trend, we should see this come down pretty hard, because if the DXY is going up and this is going nowhere, the DXY starts to come down, this should be actually selling off. So I would focus next week on bearish setups in this market. As I said, in January, the markets, they require a little bit of patience, but if we can get the right kind of bearish setups in this area, we're going to be looking next week at initiating shorts down towards the next key of support to the downside, the target set at the 1.2925. And if we can get a breakthrough here, although this might be a couple of weeks in the making, we're going to be looking down towards the second target to the downside of the next key of support, the 1.2785. And last but not least, we have gold. Now, last week we highlighted the 1552.64 as a key area of support to look for further advances to the upside in this market. We did kind of test this area, but we've kind of gone a little bit below it, a little bit above it, a little bit below it, a little bit above it, and we haven't really had any significant bounce from here. The reason we've kind of had this minor crisscrossing effect is because the 155.264 actually is a level from higher time frames. We're on the 4-hour chart here. This is actually an intraday chart. So this is just a little bit of intraday noise. We are actually considering this still as holding this support level here. So very simply put, going into next week, we're still focused primarily on bullish setups in this market. And if we can get the right kind of bullish setups next week in this market, we're going to be looking at initiating longs up towards the next key of resistance, the upside, and the target set at the 1616.70. And quickly, guys, just before I go, I just want to tell you all that next week we have an interesting week. We actually have a US bank holiday on the Monday, so we may have a lack of volatility in the markets on the Monday. They may not move very much. But from Tuesday onwards, we may actually see quite a volatile week. We have interest rate decisions out of Europe, out of Canada, and also out of Japan. And this may be the reason why actually we had corrective week last week. It may be the big institutional traders looking ahead to these and waiting to see what comes out of these press conferences. Now, going into next week, if we are going to get a lot of volatility, this is actually a good thing. It may be what starts to give direction to some of these currencies, like the dollar index, for example, starts to break some of these ranges and actually gives directional movements to a number of the currencies. That would be great. But if we are going to get that next week, it may just be worth bearing in mind it could get volatile and markets can reverse. And you may want to, certainly we will be playing next week, less risk, staying nimble, picking the best setups. Again, you guys are free to trade your accounts as you wish, but that is certainly how we'll be looking in terms of risk management next week. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing, and subscribing. A big thank you to everyone who does that on a regular basis, and a big thank you to everyone who has subscribed to the channel so far. And a big thank you to all of you who comment on the channel as well. We do appreciate it, and I want to thank you. I want to wish you all a nice weekend, and I want to wish you all a fantastic week next week. The only thing left to say is take care, guys, especially going into next week, and don't forget to trade safely.